Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Happy Friday, 11th, of November 2022. Yesterday was fun, huh? You don't see that many days, 7% in the NASDAQ in a while. And a majority of days like that do happen within a bear market. Just remember where we are. That being said, a couple of days ago, I did suggest that our technical work show the triple Qs were showing signs of selling exhaustion. That turned out to be a pretty good call. And we bought in at 268 as I suggested we would. And here we are after yesterday's move on the Qs. It has recaptured its 50-day moving average, looking up again this morning. And if you look at the downtrend, just do some simple charting. Look at the downtrend in the triple Qs and the 200-day moving average, and you've got a line that's right around 300 for the Qs. So we keep this 50-day. Probably make a charge up to that 300 level from where we 268 this morning. And that's a decent incremental return. You got seasonals in your favor. Most PMs could use the juice, could use the performance. After yesterday, at the end of the day, it just looks like we talked prior about what's going to be the career-saving trade. We mentioned this in our newsletter. It's always a fun little exercise to try to think about in bad years in the market, because there's going to be hedge funds that you try to glom onto something and run it in a year end. So we put out some candidates that we thought could be potential. Semi-Capital was one of them, which has already just completely raged, and we've mostly missed it. We own a little bit of Air Test, which we've owned for a long time. Specific situation within Semi-Capital. ASML Lithography came out yesterday in preview of their investor day today over in the Netherlands. Announced a big buyback, raised their guide for 2025 above where the street is for top line, offered a view of 2030. And that really ignited the whole space just yesterday. Just poured gasoline on a fire. Semi-Capital was up huge. ASML, I think, was up 14% themselves. So it's hard to put new money there now. We are hesitant to do so. We'll see how they act, see what goes on. But again, I still think it's too early in the broad sense for semis. But nobody cares right now. They could easily run these for a few weeks heading towards year end, because people just will go there for the most juice. That's just how it works. Anyway, so that's still a candidate. Semis in general, Semi-Capital specifically, has already had a big run. We talked about industrials before. Industrials can still work. I don't know if they've got really the juice and the sex appeal to really glom onto for a year-end trade. But we own Honeywell, Johnson Controls, looking at Eaton and Emerson for additions, and we're doing so with these are companies that have secular tailwinds in terms of growth stories going on into 23. Whether it be involved with the Inflation Reduction Act and work over there, whether it be involved in the electrical grid build out and all that kind of fun stuff. The latest candidate to throw their hat in the ring for a career-saving trade heading into the end of the year is China. China affiliated type names are going to be up this morning as curbs on COVID got announced overnight. WTI crude oil is up 3%. We've been playing the reopening in China, and I've talked about this as well a number of times via Hong Kong. EWH is what we own. That's looking up a smooth almost 4% this morning. That's been a great purchase for us. At Schwab Impact last week, Listen to Matthew's Asia give a presentation. You guys know these guys are dedicated Asia mutual fund company, been around forever. They gave an optimistic outlook on China. Go figure. They're talking their book, but they did have some intriguing things to talk about with regard to small caps. The PMs there do dig into the weeds on these companies over there. So that might be compelling. You stay away from the big, risk on the Babas and all that stuff, where she cracks down on something else and these things go down 14% overnight. You kind of avoid that with the small cap approach, in my opinion. So that does look interesting. We're trying to find. I found an ETF. The liquidity stinks, so I'm trying to find some more liquid ways to play small caps without buying them. I'm not buying a mutual fund. That's not what we do. Anyway, I'll be back more with that. But that's another candidate running into year end. It would be China affiliated type stuff. Speaking of small caps, keep your eye on the Russell 2000. That's the only broad index that is on the verge of testing its 200-day moving average to the upside. The Dow is above its 200-day, but who cares? It's 30 stocks. If the Russell does retake the 200-day, that gives all the more credence to that triple Q to 300 call, in my opinion. At the end of the day, is this picking up nickels in front of a steamroller? Yeah, it is. Probably. I shouldn't say for sure it is, but it probably is. But there's going to be a lot of nickel grabbers between now and year end, in my opinion. So I think it's one of those things where you can enjoy it while it lasts. Be smart. Remember, this is still a bear market. Watch your stops. But nevertheless, I think you're going to get that career-saving type move for folks out there in the names. Anyway, have an awesome weekend. Talk to you Monday.
Some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnellcapital.com.